Internal Revenue Service IRS tax news. Understanding taxpayer rights, the right to finality. It's important to understand our taxpayer rights these days. Why? Because the world's going to hell in a Halloween handbasket, which isn't good, because I need that handbasket in order to hold my candy. If the world has to be carried to hell, at least it can be done in some other vessel other than my Halloween. Okay, here we go. IRS Tax Tip 2021-149, October 7, 2021. Taxpayers interacting with the IRS have the right to finality. This right comes into play for taxpayers who are going through an audit. These taxpayers have the right to know when the IRS has finished the audit. This is one of the 10 basic rights known collectively as the Taxpayer Bill of Rights. There's a link to the Taxpayer Bill of Rights here. Here's what taxpayers in the process of an audit should know about the right to finality. So you're imagining you're in an audit process, you got the right to finality. Here's what you need to know about it. Taxpayers have the right to know the maximum amount of time they have to challenge the IRS's position. So remember, if you're thinking about an audit type of situation, you have, of course, the law that is in place. Then you have the government basically acting, making a decision on the law, determining whether or not you are in compliance. Oftentimes, if the IRS is taking a position, they're taking a position in which you're not in compliance. They want to make a change, which most likely will result in you owing more money or something like that. So your argument against it then isn't to say, of course, well, that's not fair. That's not really the argument. The argument needs to be, well, this is the law. You've set the law, and now you're basically taking a position that I don't think is in alignment with the law. So that's kind of the argument that would, in essence, take place back and forth between the IRS. It's not an argument, in other words, on what I think is fair versus what you think it's fair. It's an argument over the law has been set, and now are you basically taking a position that's in accordance with the law or not? And you should be able to argue your point on that and have a process to do so. The maximum amount of time the IRS has to audit a particular tax year or collect a tax debt. So there should be the basically limits in terms of when are the audits going to basically take place and what are they going to be the time frames related to them when the IRS has finished an audit. So you should have some finality standpoint in it. You can imagine a situation if we didn't have that kind of right where they just basically keep the audit open forever in some cases whenever they kind of chose to do so, which would give them a lot more power and authority to be able to just say, we haven't found anything, but we're not closing things up, and we'll just keep on, harassing you with the audit forever. Now, there should be some point in time where you could say the IRS has finished the audit and basically move on with your life at that point. So the IRS generally has 3 years from the date taxpayers file the returns to assess any additional tax for that tax year. So the general, what you might call the statute of limitations, is usually 3 years. So when you file your tax return, remember, when you file your tax return, even if you have someone else helping you out with the tax return, even if you got a refund from it, and you say, everything's clear now because the IRS accepted my return and they gave me a refund, that doesn't necessarily mean that they don't come back and audit it. They've got, in essence, the 3 years to come back and basically audit the tax return. So you want to make sure that you're doing things properly. Obviously, when you fill out the tax return, even if you have a tax preparer or professional helping you, knowing that the IRS could come back and question it, generally within the statute, which is generally a 3-year time period. There are some limited exceptions to the 3-year rule, including when taxpayers fail to file returns for specific years or file false or fraudulent returns. So this is kind of the caveat, right? So the statute of limitation is 3 years unless the IRS feels that there's other circumstances involved, which include basically fraud. So, which again, how would they really know unless they actually audited the tax return? So if they go past the 3-year period, then the IRS kind of has a larger, they have to be able to, in essence, justify why they would be auditing after the 3-year period. If they're within the 3-year period, it's basically within the window that they have the ability to come back and audit. After that, they still could do it, right? But they have to say that it's like fraudulent or something like that, or some special condition or circumstance in order to come back and audit after that point. In these cases, the IRS has an unlimited amount of time to access tax for that tax year. So So now the rules are off if they're willing to take that higher claim and say we think there's fraud involved or whatnot. We're coming after you 10 years later or something like that. So the IRS generally has 10 years from the assessment date to collect unpaid taxes. This 10-year period cannot be extended except for taxpayers who enter into installment agreements or the IRS obtains court judgments. So then they got the collection, the 10 years from the assessment date to collect the unpaid taxes. There are circumstances when the 10-year collection period may be suspended. This can happen when the IRS cannot collect money due to the taxpayer's bankruptcy or there's an ongoing collection due process proceeding involved the taxpayer. So there could be caveats to this 10-year rule. Is there a bankruptcy thing going involved? Or did you set up basically an installment agreement and so on and so forth, which basically could change the terms based on the installment agreement and whatnot. A statutory notice of deficiency is a letter proposing additional tax the taxpayer owes. This notice must include the deadline for filing a petition when the tax court to challenge the amount proposed. Generally, a taxpayer will only be subject to one audit per year. However, the IRS may reopen an audit for a previous year if the IRS finds it necessary. So usually they're going to audit you one time a year unless they're like, we got to reopen something else because of something here. So this could happen, for example, if a taxpayer files a fraudulent return. So notice kind of the caveat that is generally there, right? The IRS is saying we're going to set these rules unless we think there's fraudulent activity involved, which again is something that from a legal term, fraud would mean that you could be accused of fraud and then you could be guilty of fraud. How could you be guilty of fraud until they actually, charge you with fraud? So obviously they have to make a judgment call in some case you generally and say, well, we think there's fraud involved and therefore we're justified to go beyond this point in time, the general rules and that event. And that fraud would of course mean like a willful act to deceive on the tax return instead of just like a mistake type of situation. And you would be more likely to see that happen, you would think, with bigger dollar deviations and so on. So more information can be found on the links below. Publication 1, Your Rights as a Taxpayer, and Taxpayer Advocate Service. There's links to those items here. There'll be a link to this in the description.